Greetings, market rebels. Welcome to this week's macro measure video combined with sector situation. It is Friday, August 23rd, 2024. It's a little after 2:30 p.m. here on the East Coast. I'm Wayne, and here is our trusty disclaimer for Market Rebellion. And here is our trusty intellectual property rights notice. And now we can move into things. So if you're new to our weekly video, uh, these were separate. We've been doing them on Fridays of late and combining the two, just because I've got a lot of things happening that make it very difficult for me to get to this over the course of a weekend. So that's where we are on that. We try to be objective. We try to take a look at things and decide what's important on balance. We typically do a quick review and then get right into it. And the review is really just about coming back to where we were to then start it all over again to really appreciate the market environment we think we're going to be operating in, in the upcoming week or in the near future. So reminders always go 2x when I'm at the helm. You can see that the market seems to return quickly to complacency mode. That's not normally a sign, but we have listed those factors. Election year, I won't go into the details behind them all, but we have done that in prior videos, and they were all supportive. I think all basically helping the bull case, and I think that the bull case has remained intact this week, right? I think we'll see the chart soon, but I think it's something we have to keep in mind. I think the supportive factors were just all bullish and just kept the rally intact. And the gang even allowed for a breather, which was something that we had said we'd like to see at some point this week to give the rally a better chance to continue onward in the future. So we also had a most likely scenario in a news neutral environment, not knowing what would come out over the weekend or impact. We thought short-term pullback from overboughtness, maybe close some gaps, find some support. Where would they do it? How much of a retracement would it be? Would that then re-energize some of the major index ETFs? In retrospect, this happened, but not exactly like we drew it up last week, basically. I think that they kept the rally going really on Monday, right? So everything kind of persisted for one more session quite strongly. Then they spent really two sessions from there on Tuesday and Wednesday, just moving it up, moving it back, moving it up, moving it back. Then kind of with a new high that they closed with on Wednesday, kind of this very late push, one of those dubious little late pushes. They then pulled off a sort of a jam up on Thursday and then rug pulled things on Thursday, only to then reverse things strongly today, Friday, to on the opening in anticipation of the PAL news. So the PAL news, the PAL pivot, whatever you want to call it, that was entirely expected, as I'm sure nearly everyone knows. So they just, again, it's a great excuse to front run if you care to move stocks back up. Oh, Powell's going to say this. Oh, look, Powell said that. It was great. This has all been known. Normally, right, real news is often priced in ahead of time. Why this supposedly wasn't is beyond me. I don't think there was any secret as to what was going to happen here at Jackson Hole. Anyway, in retrospect, the volatility storm we keep reminding about, we still think it's unfolding. And if you look at really the up and down of this week, especially really Thursday and Friday, you got that. It's just that this really wasn't on news, let's say, from left field or out of the blue, whatever you prefer, because that is really what's going to, I think, create the volatility. And I still anticipate that there will be news impacts on this market. I do think, though, that I'll talk about this one devious scenario they might have up their sleeves. Basically, with the NVIDIA EPS looming this next week and the sectors being at odds with mega caps, it's gotten kind of interesting from that perspective. And on that, we will go to the next slide. And what I'll do is I'll leave this up for a few moments, and then we'll try to recap this at the end. But these are all the things that I sort of expect to motor through and try to cover. So I'll use this as a guide, stop the share, reposition us on the charts, and then we can start talking about these things a little bit more as well. So just bear with me if you will. Move this over here. I don't know why I'm still seeing that. And then I can get the right share going, and that should be on screen 4. And then I'll bring up the Thinkorswim charts there, and we might even come into these. Nope, that's not it. It would be this one here. So this is where we'll start out with the Thinkorswim charts that we're accustomed to seeing. I'm just going to double check and make sure that, yep, we're back in business on the share, and we are. So let's try to make some basic cases right now. If this would just cooperate, I'm just trying to move this down. I'm really tempted just to ditch the volume entirely, but sometimes it does help here and there. I think it's like select times where I really even bother with it anymore because of what the modern market has become. So we did talk about what we thought would be kind of a market in need of a breather. And if you look at the SPY here, this is Friday, so Thursday's your ugly candle, Wednesday, Tuesday, Monday. So that rally, like I said, persisted one more day. And then really, if you think about it, it's been a little volatile really since I'd say Wednesday. But overall, Friday's kind of looking to end with a little bit of a kind of a boring whimper. It hasn't really been a great session for trading today. I think Thursday was a much better session for short-term, obviously day trading type stuff with a kind of strong opening followed by the big reversal, move lower. But really, if you think about it, the rally extended one more day, and we're not too far removed from that. And really, that is a breather. If you ask me, sometimes I'll use that word breather. To me, this is a breather because you didn't just keep going, right? The last 4 sessions have really been back and forth to some degree, and you really haven't advanced that far. So to me, that's what I call a breather, and I think that's good for the market, and that's why I'm chalking it up to a win for the bulls this week, because if you think about it, right, you're closing towards your highest close of the week so far, and yet you accomplished your goals and you didn't really give very much back. So you get this big V move, and now right after that concludes, you have 4 sessions where you've managed to hold on to that. So if you can sort of take the overboughtness out of a market and not really give much back in terms of your gains, then I think you're doing very well as a bull. And that's really where we are. Now, this gap we've talked about really since it was left, that was 562.10 on the low that day. I don't think that closed, and I think it finally closed here. So some people might say, well, that's that then. Right now it's down from there because now that gap was closed, it's over. We were talking a while ago, don't be surprised if they made new all-time highs, and they really came within, just a few points of threatening to do that. That's kind of how amazing this has been. I did read that this is probably in the last 5 years, this is probably maybe the second or third sort of most, let's say, enthusiastic rally in a short period of time. Just how far this market has climbed as quickly as it's climbed. But as longtime viewers know, the V pattern it has become really a thing, right? It's just the modern way the last, say, 25 to 30 years, especially really since the QE situation began. They've really popped up a lot more where you see this kind of really kind of quick drop and then it's right back up again. That really wasn't the case many moons ago. It used to take a little longer, but now that these guys think there's a treasury put beneath everything, the buy the dip crowd has a Pavlovian response very often unless real news hits the fan, and you get these marches right back. So it's a good trading opportunity. It doesn't really help the situation in terms of hey, that's good. Like let's build a base a little bit lower for a while, and then when we break out from there, it really will launch a whole new leg higher. It often unravels quickly. This one has yet to do that though, so that's why I'm calling it a win. I think you have to be a little concerned right now that some of your, just to use simple RSI down here on your prior high, that was a little bit higher than where we just got to on Thursday, you had a much better RSI reading than you do now. So you could say, well, that's not that bad. Some people are going to say, well, lower as of right now, lower high, lower RSI, not as much enthusiasm. All true, but is it over yet? Right? Have we seen the high? It'll all be true in retrospect, but we just don't know yet. And I would say that chances are I'm sticking with what we have been using, which is that if there is the absence of news sort of supports this market, because the news I'm thinking of and have been reading about and have been really just sort of uh, sensing that it's out there, that news not hitting is basically the permission to keep rallying. That the news I'm thinking of is going to be mostly all bad news that would potentially interrupt a rally. So I feel like every time we come in, if you're not in a real overbought state, I would expect the market to go up. And just note in the notes that we've got, if you took a screenshot of that, that the end of, as we've been saying, right, August tends to be good in this presidential election cycle year. They typically will rally into the holiday weekend. And remember, next week they've got the NVIDIA. Let's go to there. That lets me NVDA. Those earnings are due out. I think I want to say, is it midweek, or I think what days that fall on? Okay, it looks like it falls on the 28th. It flashed a little bit there for me, but it's not doing it now. Kind of getting a little bit of that bogged down. Don't know why Thinkorswim does this on me sometimes. Yeah, I think it said 828 after the market closes. So that would be, come on, one more time. Yep, 828 after the market closes. And that's going to be on right there. So that's on Wednesday, right? So that'll set up Thursday for the possible launch, if they manage to pull that off, into and through the new, maybe make a new all-time high, lead the whole charge, and really finish August the way they like to in a presidential election cycle year, and then also finish really the earnings season and really do the typical American holiday rally. It really all fits together, and it's great cover for that. So we always note that, right, that the calendar is a big part of it. I think last week with what we saw, that a lot of that was due to the calendar. They were able to use the PPI, CPI, the rest of it. Today they were able to reverse the market on anticipation of Powell, and then Powell comes out and says what was expected, and now it's again wonderful. So it is what it is, but just keep in mind, right, that these things don't have to play out, but the reason why we keep our eyes on them is because a lot of times they do. It just the seasonal patterns and things like that. They're worth keeping an eye on, because as long as they're tracing it out, they tend to keep tracing it out. That's been my experience. There certainly are chances that news derails things here and there, but let me jump ahead on the notes, though. I'll talk about the devious move that could be in the cards. I'm not saying there's even a great probability on this, but after kind of reaching this area, not being able to this point yet to take out the all-time high, it would be really vicious and devious to sort of plunge down towards this gap closure here, now that everybody feels better about the market because the market held up so well this week. That would be sort of the early in the week sort of long shot scenario. But remember, if they did that, that would probably draw a lot of people in as fresh shorts, chase some people out, and that would set them up almost perfectly for a real goosing led by the NVIDIA EPS reaction. So I'm not predicting that. That's not what I do. I'm just throwing that out there as a scenario that you may want to tuck in the back of your mind, only because it's just so devious that it might exactly be what the gang has up their sleeve. Every now and then they get really extra tricky, and otherwise you would say, well, what's the problem? And I'll show you that right now. I'm going to jump ahead on that. Let's go to this chart here. This is just a basic, there's nothing fancy. I have other market breadth charts too, but I typically just show this one because it's just a smorgasbord of a bunch of different things you can look at, give you a sense on how the health of the market is under the surface. And you can see that these advanced decline lines that I'm using, there's a cumulative average, there's kind of like a raw, but these are all near the top right now, right? So they continue to improve. Comparison line that I'm running here on terms of new, stocks. I'm sorry, stocks above certain levels, right? Would be maybe the 50, the 100, the 200. These are now at the highs. And you're also seeing, right, cumulative volume at the high. You're seeing really the McClellan summation continues to improve, and even McClellan oscillator continues to improve. The McClellan summation index does as well. So there's really, new highs, new lows, right? Normalized new highs, new lows. It's all improving here. So there's really not a lot of bad things to say about the market. If I think it's really if you really try to be objective about what we're seeing, and that's what we try to do. I'm not sure why it didn't give me that. I might have to bring that over from here. Just bear with me. It should show up on the screen though. And if we look at our sectors jumping ahead to that, it might be tough to see. Maybe then again, maybe hopefully it isn't, but I will make some other comments on this when the time comes. But really, right, they've gotten a hold of most sectors and they've worked them back up towards either new highs. In the cases of XLU and XLI, they've moved staples up right to a new high this week. You've got XLV to new at least recent highs. Real estate new, maybe all-time, if not released recent highs. Financials, all the same, right? And even communications, XLC here. So your big laggards remain XLE, XLK. Again, XLE, definitely its own story. XLK, this is maybe the calm before the next leg, potentially. So it's storing up energy. It's holding on to gains. This is a lot like the Qs. If you look at the SMH, it's going to look a lot like that as well. So this could really be waiting around for the NVIDIA situation. But the only other thing that's really not there is XTN. XLY even made a nice recovery, not quite at the all-time highs. I mean, but it's really recovered nicely. And so XTN is still lagging, but really, right, these things have been there and the market's been able to continue to rally without energy, without transports. These are things you'd like to see join the party, and to certainly get the former leader XLK, SMH back on track, making new highs. But the potential certainly there with what we know is looming next week and the bias of late August, the bias of even a dull or listless market. There's an old adage, never short a dull market. That exists for a reason. Closing out, right, the unofficial close of summer in front of a holiday positively. So again, I would say in the absence of news that would essentially be very hard to predict for a regular guy or gal, if you're not wired somehow on something, it's going to be hard to predict some kind of really serious timing on something really negative. So in the absence of that, I think they have a good situation on their hands. It could be undermined by the NVIDIA if NVIDIA or whatnot has issues. They don't like something that happens there, something they say. That could always be the case, but the trend has been to just steamroll to and through the earnings. And that's why we mentioned, and I've got to reduce this for now, but that's why I mentioned that right a few weeks ago, that could be that could be the thing that they start working towards. They could use that, right? And we know that they tend to rally to and through. So that was part of the thinking as to how this thing could start working its way back. And it did. And again, if you look at this, right, after the second half of the V higher, this has held on to most of its gains. It's not too far off the highs of the week. So you could say, well, they didn't really convert the 50 to support. It didn't even get there. Well, the other side of that coin would be they didn't even let it get there, right? They're so eager to buy that just, again, getting within a whiff of the 50 there in gold was enough. So, I don't think this has really been impressive from a volume perspective. Look at how the volume just continues to dwindle. overall as the stock moves up and as the stock sort of has petered out here. And that's not bad to have it peter out volume wise. Basically, right, it's getting a lot of the sellers out of the way, and people are maybe waiting to buy again. But this is sort of refutes the argument that you really need that strong volume to keep driving stock prices higher. It's probably not good that the volume's tailed off this much on the one hand, but on the other hand, it's holding all its gains and there's really no serious buying going on. So in terms of volume, that's really not that bad, especially when you barely close off the highs of this week, which held most of these gains. So it's a really important stock, which is why I'm spending time on it. And it's got this catalyst right here. And, they typically have found a way to, the last few times, like they've found a way to rally to and through. And that's why this was an idea in UOA, so on and so forth. So it's really there for the taking if they want it. They have backed off the overbought, oversold readings in this thing. So let me see if I can get that for us up here. Let me get this to, I think we're on, for example, we're on 59 right now, 59.60 on the daily, which is not that bad on RSI. And if you look at something just like the hourly, you're at 57 by round. So in any short term or daily, right, no matter what you look at, you're really not that overdone. And that means there's plenty of room before you do get overdone. And so, yeah, that's why, there's been paper in there. I think everything was really setting up nicely and they just broke it out here and they were able to hold. So that's pretty key coming up next week. Obviously, it doesn't take a lot of experience to figure that one out. Let's get this moved over here. We all know how important that stock has become to the overall market. So let's go through a couple more things, make sure I'm covering all these points. So yeah, I think they use the calendar. We talked about that on the first line, still a win. The sector and market breadth, like we saw, it really hung in there or improved on balance, right? So no matter what we looked at, if you are objective in looking at it really in its entirety, I think it really has gotten better. That's why for me, it's very hard to have major gripes with what's happening in this market technically. Last week, I think it was that we noted in the audio, maybe it was the week before, but we did note in the audio commentary, not in notes, to not rule out new all-time highs. Now, we're not doing a back pat. It is not a done deal. But if we look at things like the SPYs, right? Let's look at how easily you could be there. It's less than 1% away there. I think diamonds we can jump to. Let's see where we are there. Diamonds are very close. They're a 0.5% away. And the Qs are probably, again, look a lot like XLK, which also looks a lot like SMH. Those are still 4% away, 5% away. So that's the other interesting part of this is that you could honestly see tech, tech at this point, if you want to call Qs tech, that's lagging behind the SPY and the DIA. So there's really just even catch-up potential in there as well. But the way that this thing can move, obviously, right, the way they can get their hands on tech with some of the monster moves that happen, that could easily be making new all-time highs. We've seen days where they move it up 3%. So for them to do that in 3 or 4% in a week is not nearly as much of an accomplishment. Let's see. We have an IWM idea, and we've had one in there, and we had it from lower levels. So I really can't complain about IWM because we traded it up and down, and I think both like getting those in the log has been good. To kind of take advantage of what it's been doing the past few months. But we talked about this last week that it could maybe start to work its way back up, and definitely talked about this in the summary for the bullish IWM idea this week that we've got. And I think that one, I think I've got that going out a few weeks on one of the strategies. But they got this monster move today kind of got us further towards meeting that goal of maybe challenging those highs. So you're just a few percent away of challenging the resistance line, the flat line I've got there, but you're still about 4% away from challenging the highest high that it made. So that's a little bit away. But remember, the reminder on this one is a big picture reminder. And this is really for folks that are newer. I've talked about this at times. When it occurs to me to talk about it, I do. It occurs to me to do that this week. And if we look at where this is, just really big picture, right, you could see that this is really well off of its all-time high, which was set a few years ago back here in 21. And if we inflation adjust for what's happened, I think that this thing could be up near 270 to 280. And I don't think that's even really optimistic. So if this thing can really break the recent highs at 228, go and attack that 244 number, I think it was, or at that point, get through there. This is really an area that I think you've got to watch just in case the bull scenario plays out to perfection. And it could, right? You can't rule that out, even though there's all these issues that are out there, and we try to keep track of them. You also don't want to lose sight of the fact that's why the newsletter reads as it does, that we still see a lot of upside potential in this market, because we do. Having been through this many times, a lot of problems can really pile up, but they're very good at ignoring them, and the powers that be are very good at flooding the market with liquidity and keeping things artificially overpriced versus what a lot of people think should happen. So just keep that in mind. They've been doing that for years. The Treasury really got involved in it in a big way this year, it appears, and that could continue to be the case, because even if the administration changes hands or changes parties, that could still be the case, because it seems like with each administration, each new administration, all the tricks that have been used at that point by the previous administrations are still employed, and then new tricks are developed just to, again, keep the Ponzi scheme going. So, the Ponzi, people would have thought the Ponzi would have been over a long time ago. I know a lot of people that believe that, and if they're probably right, but the Ponzi has found many ways to. It's almost like the Terminator, right? It just finds many ways to keep going no matter what hits it. It's amazing that they haven't destroyed everything with what they do, with what they do, but they haven't, right? Somehow it's all together. It's probably really one of the most ridiculous contraptions we've ever seen. If we look at it from the outside, just look at the skeleton and the chewing gum that holds it together. But at the same time, it's still there. And the alternative is definitely a lot worse in the short run, that the whole thing falls apart. But again, it's something else I wouldn't rule out, especially if the VIX gets down there, down there, down there. So we'll come back to that, though. So I would just say this thing is taking off. I think the next target is like 222 and something. But it's got that chance, if they keep pushing this market, to really challenge that recent high, the 2024 high, in my opinion, because they're convinced, right, that rates are coming down and this is a wonderful thing. And it very well may be. The other point I would make on that is somewhere in these notes is that what I've been reading is that there's global easing coming in, and it's going to sync up. So if you think about it, right, you could have really most of the central banks around the world essentially finding ways to add liquidity. And as we just noted, when they do, we know what happens, right? Usually the equity markets go higher. Now, the other big thing this week, I think, is the demise of the dollar. The dollar has gotten clobbered. And this is normally a good thing for equities. We've been making that case that if you look at things, right, normally when the dollar's going lower, you kind of remember how we bottomed. If you think about it, going back to here, we bottomed last October in the market, and the market really took off from there. That's when the dollar topped out and then dropped off, right? So the dollar is making new lows here. The dollar is really, really under pressure. The thing is, the dollar is probably oversold at the moment, without question. I think you have a 26 reading on the daily right there, but it's gotten even worse recently. I think it was a little bit lower before. Well, maybe I'm wrong. I thought it was registering a lower point. Oh, 24.59. Yeah, it did. So anyway, the point is that it's oversold. So could you see a little bit of a reflexive bounce? Yeah, you could. I mean, but the bottom line is that the trend of this thing is over. If you look at this as a big leg down, this is a corrective leg. Now you're maybe in another leg down that still has more room to go. So could be, right? Don't know for sure, just could be. And if that's the case, that's usually supportive of equities. And usually, right, the same thing happens here, where if you look at what happens with gold and silver, if the dollar is going down, they're usually heading up. So there you have it there. I mean, that's one we've been sort of reminding on. This is another kind of big picture reminder of, if you're new, just remember there's a massive pattern in place here. Probably doesn't show so well in XAU, but it sort of has cup and handle qualities to it, which in my book are pretty powerful. It's a pretty powerful pattern. I've seen it play out big many times over. It looks a little bit better here, I think, having that cup and handle sort of develop. So if this thing really does break out and it's threatened to do that, it really could go in a very big way. Don't know if that's a good thing, but that could happen. So you've got to keep your eye on it. So we've had ideas in there recently. They continue to get updated because there's more and more call buying happening. So it seems like a lot of people are at least thinking that upside scenario could play out there. So it's probably one to keep an eye on. So let's make sure where we are on our points. So we've got that. We've got the IWM. It is lagging, as we noted, has the tremendous upside potential due to inflation, as we noted. And if the market does go into a blow off phase where, right, I know the EPS expectations are being revised lower for the next quarter. They were revised lower for the quarter we're in now. This is always the case too, almost always. The third quarter is being revised down. Fourth quarter is being revised down, and even some of the first quarter of 25 is being revised down. So if you're wondering, how would you have a blow off top happen in that scenario? Why would people start with earnings projections on the way down? Why would people start to really load up? It's just the way things play out. That's all I can really say about it. It happens. I don't know why exactly, but I've seen it happen before, and it just tells me that people don't care, and there's just money. Basically, there's just too much money chasing too few stocks. So you get that. As I noted, market breadth, I'm not even repeating that. There's nothing really horrible about it. It actually looks quite good if you're objective about it. So I don't have a qualm there. There's no gripes. Let's see. We talked about the tremendous picture with GLD, SLV, XAU, just because if folks are new, don't want them to miss out if there's an opportunity that develops there. Yeah, so I took a look at the megas, and we can do that right now. And it's interesting because I'll pop them all in for us. And it's really interesting because making sure this is all good. They have sort of petered out here, and they haven't really done all that much this week. They don't really look. A couple of weeks ago, I think we talked about them, and they looked really good on the charts. And we said, this was a great chance for bulls to buy the things they love, but get a much better deal. And of course, they didn't hesitate. They really came after them like gangbusters. But you can see their kind of plight this week, where here they are with an hour to go, and this is where they were last Friday with an hour to go, right? So they're up maybe at this point a little bit more than 1%. So again, not a terrible week if you have a really great run, the way they did, and then you are still managed to this week eke out an up 1% close, from where you are or better, which they are technically doing right now. It's not that bad. It's just that the way the week ended doesn't look good candle wise, right? Just in a vacuum. And then if you look at this, where the highs were, they're definitely off the highs by a few percent. So they didn't really hold up as the week wore on. Yet you could see technically that they're right at the 10 and the 50 confluence area. They've held there. So this could just be a nice little backup breather, and then they could start to go again. But I think what's happened is um, these things did come to life so well that it's quite possible that some players said, my gosh, these things really delivered strong performance in a very short time window. Maybe I'll take a lot of this money that I just made off the table and put it into other things like some of the other sectors, right? Kind of diversify because I think rates are coming down. There's going to be global easing, synchronizing, and therefore, like materials and things like that are going to be in demand. And I'll go into there. So we saw a lot of FCX call buying today, really inordinate amount. There's an idea in there. I moved the contract out further. We were in there, I think, last week when just tried to move the contract out to keep the idea from expiring. So people in that service can hopefully still keep their eyes on things. I think it would behoove people um, to do that, given the flow we've seen and the possible and what we saw in the sectors where it seems like they may have taken that mega cap money and put it to work in a lot of other places. Maybe they thought had better better upside at this point. Don't know for sure, but that's the theory I'm working under. That covers our next line. Rate cut mania. It makes a lot of sense with to do that, right? If you with that is go after IWM and also to fan out into other things, smaller things. Uh, if you think that that's a good move, the only thing I would say is like as I already noted, XLK. This just may be a temporary thing, right? Where it just you don't want to read too much into one day, 1 hour, 1 week, but all these things like XLK, XLE, they're not going like gangbusters. It's particularly a problem for me that XLK hasn't regained its form, but it could still do that, right? It's not as if it's looking bad. And even XTN, which is really still lagging, they keep trying to lift it up. It just doesn't do that well. It never really breaks out, and then it finds a way to fall quite easily. But overall, these are the only major problems right now. And they're not even really major. They're probably better off at this stage being called minor. So again, you're really looking for something wrong if you're going to just say, well, look at these three. That's going to be the market's undoing. It could be, but a lot of other things are really working well. I think, and I've said it for a while, and I'm sticking with it. I think the market's undoing is going to be something that's off camera, something that is just not being focused on, that will come out and emerge and just hit the markets without a lot of people expecting it. Most people just won't. A lot of people that just think it's easy because the authorities have put a put underneath all these markets for so long. But every now and then, things get a little overdone on the downside. They can't manage it to perfection. Anyway, the one key message I would take out of this week would be that overboughtness has been dialed down, right? So we did say that was one reason we thought there maybe could or should be a breather this week. We kind of got that type of a week, I think, overall, just done exactly how my mind's eye had pictured it. And I would say that that's really good for bulls to hold gains after the kind of gains we've had and not really give much back and then also take the overboughtness out. I mean, I think they're set up very nicely if they want to make hay out of what's looming next week in terms of the Nvidia earnings. So I still think it's the absence of news is a good thing, because as I said earlier, I think most things are that I'm thinking of are all bad. They're not really good things. Um, the dollar we talked about already. TNX also. I'll pop that up there just because I've got it on the slide, but the yields are the 10-year yield is doing what you would expect, and overall the trend of that has been lower. And let's see if it pops up. There it is. So it doesn't look as strong here in terms of the drop or the look recently. I got to get more data, but you could see the trend there. It's been sliding, sliding, sliding. So the yields and the dollar down. Again, typically this helps, but maybe both of them are just a little bit overdone in the short run, and that might end some credence to the devious plot that I mentioned, right? If they suddenly snap back strongly, reflexively, probably, that could catch people off guard. It could create a little bit of instant panic selling. The gang would probably, in some ways, welcome that because they could really then turn it around big time in front of the earnings we talked about too many times already. I would also note that we still haven't seen that blow off top, right? So if you go back and you say, well, what's the story SPY wise? As that's our main index ETF that we chart. I don't think it's gotten. It was a nice sort of ride up, but it wasn't anything that became crazy, crazy overbought in terms of the verticalness of it, right? Where they just kind of did the old, be kind of like parabola, half a parabola type thing, right? Boom, like just go bonkers. But yeah, that could happen on the dream of lower rates and new highs, and the Nvidia maybe talking about how this is the golden age of everything. I don't know what that would be, but it could be a lot of people off sides already too short. I haven't seen much on that lately in terms of the hedge funds, but I do think on balance there's still buying that needs to be done by certain sort of mechanical buying groups. So if that's the case, that might explain the last 3 weeks of almost relentless buying. There's not a lot of bad looking candles that are mixed in that whole past 3 weeks. So, but again, I don't want to sound as if I don't believe there's any downside possibility. I do, of course. It's just that when you look at the charts, unless you are really thinking that the Mag 7 plus are going to roll over and they're going to have trouble, there's really not much I can say about the overall market. I think it's too early to say, oh, there's negative divergences or there's lower highs plus weaker oscillator readings. Yeah, there are, but is the game, as I said earlier, is the game over already that we can pronounce that a done deal? I don't think you can pronounce that a done deal right now. I still think you have to wait and see, what next week brings. But Apple, Amazon, you can see that these are not really lighting the world on fire right now. They did have really nice pushes, but they're not lighting the world on fire now. And this might be the one Achilles heel of the market, is that these megas are not behaving like they typically do. But as I said, and I'm not someone who makes excuses for bulls, because I think uh, almost everybody else out there in TV, in the whole TV coverage, they're the ones that have that job, and they do it very well, and I would never be able to beat them at it. But so I don't really make excuses for them, but I don't think I don't think there's much else wrong. You just saw Microsoft there. I don't think there's much else wrong except for the picture that we see here, in some of these. Now, I don't know what would cause them to roll over and then other stocks not to be bought. But you can see these are not really at a great juncture. It's a little different for each one, right? But overall, they don't all look primed to move higher the way we thought they did a few weeks back. I think the one that's the most constructive right now is probably this one, because it's going to close near this week's high and it didn't really give much back, and it's got the looming catalyst. So that just gives you a kind of a look at all that. They don't look as good as they have, but again, I chalk it up to rotation right now, which it is a little bit of an excuse, but it does seem to be what happened. Let's see. Yeah, so absence of news is good. Talked about the dollar, talked about TNX. There is no blow off. Global easing is supposedly on the way. So there's a whole nother Ponzi cycle set up, right, to basically go lift off soon. The dollar doing what it's doing, this could also help crypto. Just want to remind everybody that uh, we do have some paper. It hasn't been overwhelming, but there's been some recent paper in coin, a couple of the others. Coin is sort of doing a little bit of a takeoff here today. I don't remember where we got in on that. There is a bullish idea in place on that, but all the details kind of elude me. So I think it's still active today, if not through next week. I can't remember. But anyway, that should help, right? The dollar taking a beating should help that whole area. The complacency mode is back. So I'm not going to show the put call ratio or the survey bullishness or the percent of this forceful move that we've seen. Really, we have seen a very kind of like percentage jump. As I noted, it's probably one of the strongest kind of quick jumps we've had in the last 5 years, but it's not even given what happened in COVID, it's not really the top lift off from a low to almost like straight back up again. But it's registers, put it that way. So yeah, the complacency's there. The world's still awash. In red this week, we've got won't matter until they matter. The major issues, that is. And that's just re-emphasizing that, as is many still won't see it coming. It's just the way that the market is. People tend to get caught off sides. I think they just sort of they really do get complacent, because they've been trained like Pavlov's dog to think that they're just always going to be saved by the authorities. And for the most part, that's not always been the case, but it's been the case most of the time. There have been, certain episodes or exceptions, but they've been saved most of the time, which really justifies why they should feel that way. But again, there have been really rough ones you've had to live through, what you probably could have avoided if you were really, I think, paying attention, just by being really great with overrolling at the right times when it gets really extreme, or there's signs of real dislocations to the downside happening. I'd still keep the DEFCON 1 Esterhaus warning. I know it seems like, well, why would you do that? I just think it's because of all this geopol, mainly because people just seem to have lost sight of that. And I do think that that's going to rear its ugly head at some point soon. And it could even be domestic problems too. And volatility does tend to cluster. And we haven't really had an echo at all with respect to the risk off situation that developed due to the unwind of the carry trade. So just that kind of a note. Due to potential news hits, I'd stick with this rolling mentality for the same reason. It's not because I don't believe the market can go higher or that it shouldn't. It's more because from all the reading I do, I think there's a lot looming out there that is really well off the front page for most people. I already talked about the devious move, how they could fill those gaps that were left on the way up early next week, maybe because the dollar again springs back strongly or something, or some international development occurs that helps the dollar spring back reflexively, which hurts stocks. But that could be, and I'm not predicting that it will be, if they did do that earlier in the week, it would almost be a perfect setup, drawing fresh shorts in, chasing out longs to then reverse in front of the earnings of NVIDIA and then run and gun on those and into the weekend. That's just one scenario, though. So don't bet the house. I'm just saying it's probably lower probability scenario, probably less than 1 in 5 times that would happen, but it could. And I've seen that kind of take no prisoners move before. So, and that could be a prelude to, a blow off top. But the problem with that is that September is typically not a great month. And as I said earlier, if these seasonal analogs keep working, these cycles that just continue to work, which they have traced out pretty closely, then we may as well stick with them until they really veer off from the typical script. I would still use a real goosing to load up again. I talked about that. I'm not even going to repeat that third to the last line, but that's what I would do. And I don't know if this is petered out yet because I just don't see enough cracking in the indices, right? So we'll have to see. The VIX was really trying earlier today on that note, and then it really, because you've got the weekend, it really then turned around and dropped off. So it was up to 17, and now they've got it down back down towards 15 and change. So I wanted to hedge. I did buy some VIX calls, and I let them go because I just didn't think that this was going to be the week. So I got out of them for just some, little profit on both not both contracts, both series that I bought. But it was no big deal and no harm done. I just didn't have the sense that they were going to let things crack the way they were acting, and figured they would use Powell. I got out of them yesterday and figured they would use Powell to keep the market afloat, which was probably a good guess. Um, anyway, uh, I still think that they could do the re-energization again this week. So let's look at all of these a little more closely. Four major ones we typically look at. And I'm going to say that, right, this, if we're honest about the cues, this high that I've got, the 487.20 level that's been there, and we noted it in the past that it's kind of a big level, probably needs to get through there to really start trucking. So I think you need to like 1.5% more from where we are now to really start to go. That could happen pretty quickly. Remember, the devious scenario here probably closes this gap, which is just above the 20 there in light blue. Not that it couldn't get worse and there aren't other gaps. I'm just saying that's probably as far as I would expect it to fall. If it's unaccompanied by major macro or geopolitical or just domestic news that's out of the ordinary, let's say. So otherwise, again, I still say this is a victory for the Bulls, even in the Qs, which are not really going like gangbusters, excuse me, to finish this week, but they held on to their gains, right? So they accomplished everything we said earlier. So the breakouts above there and the breakdown is probably below the Thursday's low, right? So that would be 470, 381. And then up here, you're looking at, really 480, probably 487 realistically. Hate to say it, but so you're trapped in between those. But once it leaves there, that's when you could probably get more. I would think, it depends on how everything else is going too. But the spiders, we'll go jump back to those. The spiders to be, note that the daily RSI on the Qs is only 58, so it's not even close to 70 as it stands now. The spiders are closer to, right, the all-time high. They're less than 1% away, and they only have a 63 rounded RSI. So they too could easily push through the all-time high and not really even be that overbought yet. And so the projections on that probably would come from, let me see if I can get this to come up. You know what? I'm going to do it this way. This might be faster. Yeah. So I think I've got projections on, is it this one? Let me see. Bear with me, please, on here. No, it's not that one. It's this one here. Yeah. So here's my, I like trading view for this, that this is an old projection on what the market could do from prior price action that led to this bottom. And so the projection on that actually comes out. The next level up is the 1.618 on SPY. And this is looking at the daily. And then that would put us somewhere up near here if I put the flat line over it. And if you notice, my most aggressively drawn resistance line, which is the one I'm mousing over now, that's in just about the same place. So if it takes the next couple of weeks to really march up there, that's about where it would put us at, probably somewhere in mid-September, which I think you could get away with, but that's usually when somewhere in the early to mid part of this or September is my recollection. That's when the really kind of rough stuff typically starts in terms of the seasonality. So just keep that in mind. But that's the first level of the big projection that we would go to. It would be about Well, 589. And so that's not too bad, not a bad little trade from there. The next one goes obviously even further. You're up near six. I've got that one at this point went straight up 610. So if we take it out further in time, it's even further. And then if we go even further with other lines from other market structure that exists way, way, way back in time, you're looking at, a breakout from here, and then you're probably on your way towards 7,000 SPX or 700 SPY, at that point, somewhere in that neighborhood, depending on how long it would take to get there. So it is what it is, but this thing is still intact. Again, you're looking good on your market breadth overall. You're looking pretty good on your sectors. And I still think the major risk to it all remains the news. Or maybe the bottom is falling out of the economy, and it's just not being shown yet in the statistics. That would be something else you could maybe throw out there. But really, I think it's very easy in SPY. You're looking at a run towards the all-time high. That's your breakout from here. If you want to trade the breakout to there, then you're just using this week's high, which is 563.18 at the moment. So, but that's just two points. It's nothing, and then you're really breaking out from there. Remember, you always have to be worried over a false breakout, a slightly higher high, reversal, all that kind of stuff, or similar high reversal, slightly lower high reversal, all those things. So again, there's no rest for the weary when it comes to trading. But the downside, I think you may as well wait for this week's low. I think I would just use the weekly candle for breaking out aggressively and breaking down. Whatever you can, they're all about the same area. It's just not a great area to trade a breakdown because you've got a lot of SMAs and other forms of support. I think from lines I've drawn, they're all bunched up waiting for it. So again, to really slice through that, it's a better trade to the upside, if you ask me, just purely on that there's no resistance in the way once you're through 565. And that's the trend as well, so not that you can't have it the other way, but like I said, I think it's more of a news-driven situation to really get bigger downside out of nowhere right now. It's going to take, in my book, it's going to take news, which could happen. It could be financial markets news. Something happens that really creates risk within the system because there's been too big of a move down in this or that, or too big of a move up in this or that. They already have this poised to break out in the diamonds. This is also, to me, with all the support waiting for it, again, I would probably say you got to use the weekly low to trade the downside, knowing that you're going counter trend, but you could hang your hat on lower high versus back here, and it failed when it should have been able to keep going, something like that. But it's premature. Look how well this is closing. And remember what we said about the XLI and the XLB. Again, we said if they start doing well, then that'll help the Dow. It's not a big secret. And you can see what they're doing this week. This is where I think some of the rotation has gone to, right? From some of those megas into some of these other areas. And this thing's really close to the top of its recent range. Wouldn't take very much you're talking about like another percent roughly just to move up and challenge that high right there. It's been in this consolidation for a while. So, excuse me, in theory, there's a lot of stored energy here on a bigger picture time frame when you're not nearly as overbought as you are in the daily. Let's just check. Let's say, for example, we'll jump down to the monthly just to see where some of those numbers are. And right there, you're at, what are you on RSI on the monthly chart? You're at 59, so yeah, you could see how close you are to breaking out. So this thing could break out. XLI is making highs, and there's no surprise then that the Dow is doing what it's doing, and it's very close to the all-time high. So there's that and that. In terms of the levels to use for that, I would say that just again, I'm going to switch over to the weekly candle. I think you just use the weekly at this point. And again, I still think if you want to talk about asymmetry, I would much rather trade the upside here than the downside at the moment because of the same exact thing I've been saying is just there's no resistance in the way other than fibs pretty soon if we keep going. that you could come up with that. And on the downside, there's a lot of support. So I think you use 406 and you use 412, 32, right? So this week's high, and otherwise, and you're really close to that. So otherwise, right, like, you're stuck kind of in this, maybe a widening megaphone on the weekly, and it's maybe not a great trade. But again, I would go back to, I don't want to mislead people and say, have people think that I don't think downside is possible right now. I'm just saying that A, it's a lot easier to move up technically, and B, it would be counter to what normally happens at this time of the year for a variety of reasons if we did go down. And C, that's why I'm a believer that it's going to take news you don't see every day to really trigger that. Now, there's a lot of positioning happening in here in IWM where they think that apparently a lot of players are not waiting for rates to come down. They're just positioning themselves that way. So look at this base on a monthly, right? Look where you are on the monthly RSI. You're at 59 again. So you have room to break out on a monthly before you would get overdone. It would probably take, a pretty good move to get overdone. Highest high is 244. Like I said, if you can break through there, I really do think I would say this thing's got about 30% upside right now in my book. If it ignites, if they ignite things and they go with the lower rates, blah 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 blah. So getting back to the here and now, though, let's go to a daily chart. Yeah, and I think you've got to use this week's high I'm sorry, you got to use today's high. And if you want to use a breakdown number, hate to say it, but you probably have to wait for the 20-day, which is at 212. I mean, so you're waiting 3%, 3 or 4% already before you can even really feel better about it's breaking something important. Otherwise, you're probably just trading in the middle of a noisy range. If you want to be super aggressive, sure, you could use it reversing this strong candle, taking out that low. But I would say, you got to have news backing that you think is material, like really impactful. Otherwise, right, you're really fighting against a short-term trend and a big picture trend that's primed to go. So we see that IWM has explosive potential if that global easing sync up happens and liquidity is everywhere, and everyone thinks the next leg of the Ponzi is going to be developing, and it does. And then you get this tremendous probably run in IWM. You will get maybe so these kind of things eventually spill over and help some of the few lagging sectors that are out there, like XLE, because that starts to light a fire under more businesses and the demand for shipping starts picking up, and then that finally has its day to start shining again. I would think that XLK will get back on its feet on its own, but that would help XTN as well. And the other explosive potential would be what we talked about in the precious metals, because the dollar's getting smoked, and the dollar just continuing to go down and be under pressure. Should that be the case, that will likely help stocks again. So you got a lot of reasons to think there's a ton of potential here still. It's just that you're still trading smart, like we try to all the time, because if you do a lot of reading like we do, that there's a lot of things lurking out there that the people that are just thinking that we're good to go, just are dismissing. And it's probably right to dismiss that stuff a lot of the time, to be honest. But at times it isn't. And I think my sense is that this is one of those times that isn't. So that's why I feel the way that I do in a very general way. So on that note, I'm trying to think if there's anything else. Since we sort of changed our format, I don't cover all the names the way we once did. But I think the biggest kind of thing I would end on is, if they do really punish bears again next week, using the catalyst we talked about, using the seasonality we do, and they do work this thing back down in front of a long weekend, which is possible, that's the point at which I would definitely be buying November and ideally February vol. And then I would, if you can't get those, I would buy probably some AUK, some DEC, some Jan. but I would try to go out just a little bit. I mean, it's not like it's the end of the world to buy September. It's just that I'd rather have a little bit further out in time. Gives me plenty of time to manage my long IV and maybe roll that out before the theta becomes too difficult to manage. It really works against me. But I probably would do that. And then if I had those kind of hedges and things like that in place, I would try to keep the theta under control through maintenance trades, we could call them, while I would be ready to trade the long side as long as this market continues to look as healthy as it does. And the key factor being the news just continues to be quiet. There's no real eruptions or disruptions that develop, because otherwise, I think without that, without major surprises happening news-wise, I think the things look poised to want to go at this moment in time more so than they want to fall apart. So on that note, I do hope that something I share with you helps you out this upcoming week or some week in the future when you're trading. I want to thank everyone for tuning in. I want to wish everyone a great weekend. Hopefully this video will get out for a change in front of the weekend, but I hope everyone has a great weekend and a great and safe trading week in the markets next week. Thanks again for tuning in.